Welcome to another episode of AM Daily Crypto. As always, I am Crypto Lissa, and the article right here in front of me is Expert Sends Trouble as Coinbase Shuts Down U.S. Affiliate Program. And we will get into all of this in a second. So there was that lovely intro for you guys. So obviously, please do your own research before jumping into any cryptocurrency, and please like, subscribe, and hit the notification bell on Twitter as always. And we are now on Fox D, I believe, as a news channel is what he told me. I'll have to go in and look at my Twitter here at the end of this so you guys can see. So as always, we know crypto market is in turmoil right now. Bear market for sure, people losing. As we can see, red up across the top here. So Expert Sense Trouble as Coinbase shuts down U.S. affiliate program. Again, cryptocurrency users and industry experts are sensing troubles ahead for the leading U.S. exchange Coinbase following recently leaked information that a company has decided to stop its affiliate program in the United States temporarily. It's no longer news that Coinbase has been facing headwinds with its global operations amid the bear market. However, the recent reports in past weeks somehow convey that situation could be more serious than imagined. These are worrying times for Coinbase and cryptocurrency users. According to emails leaked to a business insider, Coinbase intends to temporarily suspend the U.S. affiliate marketing program starting July 19th, which is next Tuesday. Before this update, some of the promoters claimed that the company slashed the commission bonus by a wide margin up to 90%, according to one creator. Quote, "This has not been an easy decision, nor was it made lightly, but due to the crypto market conditions and the outlook for the remainder of 2022, Coinbase is unable to continue supporting incentivized traffic to its platform," end quote. And that was a quote from Coinbase. Meanwhile, the exchange did mention that the program would resume in the coming year 2023, but failed to state the exact date. Experts perceive the report as a red flag on Coinbase, with some warning that users to pull out their cryptocurrency from the exchange, saying the exchange could be headed for a liquidity crisis. Coinbase just shut down their entire affiliate program. This is a major red flag. I fear that a liquidity crisis is on the horizon. Ben Armstrong, BitBoy Crypto, not Big Boy, BitBoy Crypto, believes that the exchanges of Coinbase going bankrupt is very slim, but not impossible. Should Coinbase file for bankruptcy, quote, "This would break the crypto space like we have never seen before," end quote, he added. The price of Coinbase stock coin is presently down over 78.57% on NASDAQ year to date. Last month, the company laid off about 18% or over 1,000 of its employees amid the strain of the bear market. More recently, Cryptopolitan reported that the exchange's average trading volume has tanked over 82% from the peak in November 2021, $7 billion to $1.2 billion. Also, the exchange has fallen from the fourth largest by trading volume to the 14th largest, according to Dan Dolov, an equity research analyst at Muzo. Sorry if you can hear growling. My girls are growling back here. Girls. they're fighting over a piece of bread. They act like we don't feed them. Okay, on to other crypto news via Crypto Potato. Celsius bankruptcy is unsurprising, says Tezos co-founder. DeFi market cap dumped 75% in Q2, but users' activity fared better. Over 150 million liquidated as ETH price skyrockets to a monthly high, written by Georgiev. The price of ETH has exploded in the past couple of hours, reaching an intraday high at around $1,420. I don't know what it's trading at now. We'll look after this. This happens a day after developers confirmed that ETH 2.0 merge is on track to happen in September. So this was the major news a couple of days, or yesterday, I want to say. Let's see, when was this written? The 16th. So yesterday, ETH 2.0 merge is on track to happen in September. That was in the ETH call. But again, I don't know if that is ever going to happen, because I don't know if miners will let that happen, if that makes sense. But I mean, we'll see. Everything happens for a reason. It could happen. And there is obviously debate on where these miners are going to go when ETH 2.0 does take effect. According to data from CoinGlass, the past 4 hours saw over $150 million in liquidated ETH positions. The largest single liquidation order happened on FTX, and it carried a face value of $2.81 million. Needless to say, the majority of liquidated positions were short. This happened on the back of ETH exploding by 7% in a single hour candle, charting a high of $1,422 on Binance. And here is this green candle they are talking about. The volume on the candle has been over $300 million. The last time ETH was trading at these prices was back on June 13th, almost a month to the day, meaning that the cryptocurrency charted a monthly high. Ethereum is up over 10% in the past 24 hours and a whopping 40% in the past 48. It's worth noting that the increase comes a day after developers confirmed that the ETH 2.0 merge is on track to happen in September. Pretty interesting that this candle happened. I don't like to do TA because I'm not great at it, but I just find it very, very interesting. Latin Americans most bullish on crypto, Ripple study found. And I think part of this is because, what is it? Brazil? Is it Brazil? No, I'm wrong. I don't know. The one country that is Bitcoin complete. I'm losing my train of thought. But is it Brazil? No, it's not Brazil. I don't know. Whatever. The one country in Latin America that is completely Bitcoin. So I'm really not surprised that most other Latin American countries are bullish on crypto, because obviously crypto is more than likely better than a lot of the other currencies they have. Sorry, totally lost my train of thought on that one. John McAfee, partner fined by the SEC for ICO and pump and dump scams. Also written by Georgiev. The U.S. Securities and Exchange Commission announced a judgment against an associate of the late John McAfee for participating in an alleged initial coin offering, or ICO, scam. The top financial watchdog argued that Watson had assisted John McAfee by working on the promotion of deals with various ICO issuers. He also allegedly helped McAfee to cash out some of the cryptocurrency payments that they received. That's interesting. The final judgment against Watson bans him from buying, selling, or even offering digital assets in any professional capacity, while also slamming a total financial penalty upwards of $375,000. However, he can still buy or sell crypto on his personal behalf and with his personal accounts. The SEC also went on to accuse Watson and McAfee of promoting and taking part in various pump and dump schemes while accumulating massive positions and then promoting it on Twitter to the millions of followers that the antivirus tycoon had. Pretty interesting that now they're saying that they were part of ICOs and pump and dump scams, which I'm really not surprised because 2017 was really, really big for pump and dump scams. But it's also pretty interesting. Crypto mixers usage from cyber criminals seems all-time high, which I'm also not surprised, simply because, let me see here. I'm trying to get another screen up on because I have 3 screens. I'm trying to get another screen up top here. I'm not surprised because cyber criminals, what did this do? Oh my gosh. It brought that up for me. Whatever's. Crypto mixers usage from cyber criminals seems all-time high. And that's going to be an all-time high because cyber criminals are going to be smarter and put you in a more vulnerable position simply because it is the bear market. And, people want to make fast money, so they promise this, that, and the other, and you make fast money, and you make all this stuff that seems unattainable, right? Like it's too good to be true type of thing. And if you feel in your gut that it's too good to be true, then it probably is. So just beware and keep your cryptocurrency. If you don't day trade and you're just keeping it for the long term, get it off an exchange, because as Coinbase is now shutting down their affiliate program, I'm a little worried about them stopping. So just get your stuff off of exchanges. I don't think anyone, there was a comment on my 2 videos ago that said, what exchange do you think is going to stay? And honestly, I said, who knows at this rate, because none of us know what's going to happen. And that's why you always have to do your own research and just beware, guys, of what's going on, because these are like hard times. Even in the US, inflation is like crazy numbers. So just beware and be on it, and just keep your guys' self safe. Polkadot's network usage remained consistent in Q2 despite market a downturn. Polkadot, I've heard a lot about, that there is a lot of development going on the blockchain. Mandy Williams wrote this morning. Blockchain analytics platform McAfee has published a detailed report on Polkadot's performance in Q2 2022. Analyzing different aspects of the protocol, including market valuation, network usage, developer activity, parachains, and ecosystem challenges. The paper, dubbed The State of Polkadot, that's funny, revealed that the blockchain's project's native crypto asset shredded about 66% of its market cap in 3 months. Polkadot closed the last quarter with a $7.9 billion valuation, down from the $15 billion valuation recorded in quarter 1. Wow, that is a lot. I didn't even know Polkadot was that big, guys. This also represents an 86% drop from its all-time high market cap of $49 billion in November of 2021. See, I think November 2021 was like the best month out of everybody, because I keep seeing that November 2021. The report further noted that despite the massive slump in valuation, Polkadot has continued to see favorable developments in some aspects of its ecosystem, especially in network usage and developer activity. McAfee pointed out that Polkadot's network usage remained strong in Q2 2022, despite the massive correction in price of Polkadot's native currency. While users' accounts remained nearly consistent, the number of active monthly ones on the network grew by more than 30% in the last quarter. The project recorded 145,000 monthly users in Q2 with 77,000 active ones and 68,000 new users compared to the 149,000 monthly and 56,000 active in quarter one. The consistency in user count is further revealed in the value of DOT token transfers made during both quarters. In Q2, Polkadot had an average of 293 million DOT transfers per month, marginally higher than the 288 million DOT transfers in the previous quarter. Thus, in the second quarter of 2022 alone, Polkadot had an estimated 435,000 users with an 878 million DOT tokens transferred. In addition to positive network usage, the report revealed that Polkadot's developer activity was impressive during the second quarter of 2022. In 2021, the protocol had the second largest developer community, and in Q2 2022, developer activity on the network stayed consistent with an average of 11,000 dev events per month. According to Mesuri, this metric on Polkadot remains one of the strongest in the crypto industry. Last month, Polkadot's creator Gavin Wood disclosed a proposal for the next generation of governance for the DOT ecosystem. The report also outlined some challenges that rocked the Polkadot network in Q2. Although the project recorded strong network usage and the developer activity during the market crash, other metrics were significantly down from their all-time high. Mesuri suggested that, quote, developing new functionality and use cases, end quote, may help resurrect that word looks weird to me right now. User interest and more activities on Polkadot, especially now that the network has enabled XCM for cross-chain asset transfers. Furthermore, the report pointed out that Polkadot must continue to scale and connect more parachains to XCM while maintaining its developer activity dominance. Pretty interesting. I'm going to have to look more into Polkadot. I know I bought it low, sold it high. So I actually don't hold as much cryptocurrency as I used to, which kind of sucks, but it is what it is. Crypto is not a priority for most private banks. Not surprised. Because the banks don't like crypto because it is on-chain, and therefore we can see what everybody is doing behind the curtain, and people don't like that. New York Yankees ready to pay employees in Bitcoin by partner with NYDIG. Pretty cool. I think that is awesome. Blockchain platform Fiverr? I don't know. To expand its operations with $100 million fundraiser. Again, not surprised. People are trying to raise funds to make sure that they are not affected by this market crash. And obviously with 3AC, Voyager, and it's just, I don't even know at this point. Like, I'm trying to remain happy because this is actually the first bear market I have been through. But yeah, I'm trying to remain positive and happy and make sure that we just really stay safe. Over $718 million lost to Web3 hacks in quarter 2 2022. Not surprised. Again, with the bear market, everybody wants money. And what is the best way is to do hacking. DeFi Capital denies involvement with 3AC. Not surprised. Or D-Finance Capital. Not surprised. Nobody cares about Shiba Inu, and there's a reason for it. Let's read this. Georgiev. Shiba Inu, or SHIB, is the second largest meme-inspired cryptocurrency. It's safe to say that it was all the rage for a couple of months back in 2021 when its price reached an all-time high on October 28th, 2021, clocking in at 0.00008616. While it may not seem like a lot, this was an increase of a few 100,000% in less than a year. Shiba Inu became a worldwide phenomenon where everyone was looking to get in on the hype train. Fast forward a few months later, the price is down some 90% from its all-time high. Social sentiment is practically non-existent, and interest in cryptocurrency has disappeared. In this article, I attempt to provide a few reasons why this has happened, but first, let's start with the numbers. This statement in itself could be a bit of a stretch. There are still some people who follow the project, but SHIB's popularity was so high in the latter half of 2021 that those who are currently involved pale in comparison, and there's data to back it up. First off, data from Google Trends reveals that the searches for Shiba Inu keyword are down to levels seen before the hype of October and November last year. Google Trends is a common way to gauge retail interest in a certain topic. Of course, it's also worth noting that the term Shiba Inu is used to describe a particular dog breed, after which the cryptocurrency is named. Therefore, the people interested in the coin itself are likely even less. You can see that trend. And while many might argue that this is because the overall decline in the crypto market, and they could be partially right, Bitcoin didn't see such a massive decline in retail interest. Data shows that the searches for Bitcoin are down around 50% from their 12-month peak, whereas searches for Ethereum are down about 65%. These are notable declines, but are nowhere near the 95% crash in interest that Shiba Inu experienced from its 12-month peak. Social mentions. Data from the popular analytics resource Into the Block provides further insight into Shiba Inu's social presence. Based on multiple social indicators, the interest in the cryptocurrency is clearly plummeting. For example, Twitter sentiment is trending downwards for quite a while. The same is observed across other community building platforms. Telegram. The members of the SHIB channels are declining, and so is the sentiment over there. Clearly, the interest in Shiba Inu is going down the drain. But why is that? Well, for once, it has to do with its unsustainable growth that was evidently based mostly on sheer speculation. To support this, Crypto Potato reported back in October 2021, when the trend was peaking, that SHIB futures trading volume had gone up by a factor of 78 times in a matter of 7 days. Futures contracts are used predominantly by speculators who want to leverage higher positions when profitable market opportunities present themselves. Their increasing number is indicative of the massive speculation that was plaguing the market. At around this time, stories of SHIB-made millionaires started popping left and right. On October 31st, 2021, the cryptocurrency was up over 100 million%? 2 billion? I don't even know. Too many numbers. I'm not good at math, guys. Since January that year. That's right. Oh, here we go. 100 million%. I thought it was million. This meant that anyone who had invested as little as $1 on January 1st would have literally been a millionaire had they hold to the stack. This invites a certain crowd of investors who don't care at the slightest what they're investing in. People were rushing into SHIB, and SHIB-inspired copycats like crazy, and interest was sky high. Of course. At some point, other meme coins like Polkadot were advertising on physical locations like the London metro station or some public transport buses. Interesting. What's the problem with that? Well, that's the kind of unsustainable growth that I was talking about. The problem is that the moment the music stopped, the crowd loses interest. In this case, it's the price. The moment the price stops soaring and charting new all-time high, people who were in it for monetary gains either sell out and never look back again or hold on to their bags in hope of a miraculous recovery. Data from Into the Block shows that around 72% of those who hold SHIB are at a loss. Pretty sad. Of course, this is to be expected given that the price is down 90% from its all-time high, but also shows that many people were chasing pumps long after the price had soared by thousands of multiples. Usually, only people with massive conviction remain interested at times of peak despair, and SHIB's crowd just didn't seem to have that at all. Not surprised. I will have to say that my dad was one that fudded into, well, not FUD, but was scared about SHIB, so he invested, and he was up really high. And of course, I tell him, like, hey, you need to probably pull out, la la. He didn't, so he lost some money over it. But what can you do? You can't rescue all of them. Ooh, is that a new Celsius article? Oh, no. It's not. So, in today's news, obviously, we are figuring out that we need to take care of ourselves. And we need to take care of our crypto and our crypto assets and get stuff off exchanges because we never know when somebody is going to file for Chapter 11 bankruptcy. So with that, guys, I'm going to kind of end it here because we are at 27 minutes. I like to keep it around 30 or less than 30 is ideal. So I hope you guys like this video. And if you like this video, please like, subscribe, and hit the notification bell, this little bell up here. And you can see my daughter loves Kid City. It's funny because they are a gaming family. So this is our YouTube AM Daily Crypto. If you could go and, like I said, hit that like, subscribe, and notification bell up at the top, that would be great because we are trying to hit 100 subscribers by the end of the year. And I hope you guys have a good weekend. Happy Saturday. And have a good night, guys.